In our MTO segment, we are of course in the global trade, and we hope that this global trade restrictions will go away very soon, and normalcy should prevail. We expect that this volumes should continue to grow. The consumption is growing, specifically in India. The consumption is growing, and definitely there are many more imports coming in, and we continue to see that globally also the trade is holding up, and we should expect the trade to grow anywhere around 3% in the coming year.
Well, that's the word at present on the segment. But how are the freight rates panning out? I was just earlier talking about again to the management of shipping, and we're discussing again the Baltic Index impact. So, what is the impact for you, and is demand seeing an uptick?
Freight rates remain fairly stable, and obviously that is a combination of the trade, A, the volumes, and B, the supply demand. I think the supply side still remains constant, and as and when we will see that some of the vessels are going in for scrap or being not ordered, many more are not ordered, then we will see that the freight rate should firm up and look better than what they are today.
Right. In terms of the CFS segment, do you see improvement in the port volumes in the near term?
In the CFS market, we are of course dependent on the imports coming into India, typically the EXIM of India, and we can see with the consumption drive that we are having numbers which are healthy in terms of EXIM volumes, and with the capex cycle starting soon, we should see these numbers even firming up. So we remain confident that the port volume should grow, and thereby also the CFS volumes.
Right. And so, what about the land, the 93 acres of land acquired in Jhajjar? What are the plans for the space? How fast could this ramp up?
We are working on a multimodal logistics park strategy. That is the new business or the growth area that we will have. We continue to look at this in a very focused manner. We already have started construction in Bangalore, in Hyderabad, and also in Jhajjar. So these multimodal logistics park is what the future will be for us, and we expect coming 6 to 8 months, this should contribute in the first phase towards the profit and loss of the company.
Right. And for the P&E division, how are the utilizations looking like? Also, where does the order book stand at present?
In the P&D division, obviously this is a division which is related to the capex cycle, and the capex cycle is improving. In the project logistics, we have an order book of approximately 180 crores, and in the equipment division, which is the equipment solutions, we are seeing the uptick in the leasing, and the utilization of assets is improving. In 2 quarters ago, we were down to almost 40%. In the last quarter where we declared the results, we were up to 55%, and we continue to see orders coming in, and we expect that this utilization shall improve as we go forward.
Right. And what's the FY19 closing quarter outlook looking to you? Overall, a comment on growth drivers for FY20?
Clearly, for our future, that is the coming financial year, which is 19-20, we will be looking at expanding or growing into multimodal logistics park and improving our contract logistics services, in the sense the footprint. We will cover a lot more markets, lot more areas in our contract logistics, and those will be our growth drivers, while we will continue to focus on our existing verticals where we will see the growth higher than the market, and the focus is to improve the ROCE and to look at us, as ALLCARGO, we have delivered consistent, operational cash flow. We have a net debt of 0.08. We have a very healthy balance sheet. We have a good dividend record, and the company is continuing to grow in the sectors which matter, in the segments which matter, and those are multimodal logistics parks and contract logistics.